Good afternoon, everyone. I'd like to call this workshop to order. I appreciate everyone being here today and taking the time to go through these topics with us. At this time, let's stand and begin with a moment of prayer, pledge of allegiance. Dear Lord, thank you for today. Thank you for everyone who took the time to be here today. Lord, I ask that you give us direction and wisdom as we discuss topics concerning our city today. I ask all these things in your name. Amen. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible. Yeah. Sorry about that. All right, our first item for discussion is a presentation of the 2024 audit report. I know this is a highly anticipated document given the financial challenges of the city has faced during this period. Before our auditor, Tacey Jo Bracken, comes to present, I want to take a moment to thank Tacey Jo and our staff, our finance director, and our whole team for working so hard to get our city's financials to a place where we can have a fresh start. It's because of their hard work that we're truly able to move the city forward in a financially responsible and transparent manner. At this time, I'd like to invite Tacey Jo Bracken to present her findings. And I would also ask that the council members hold your questions until she has completed her presentation. Thank you.
Is there a way to move this where I'm not, I feel like I'm behind you. Afraid I pulled the microphone out.
Sorry.
Thank you. I hated to talk to your backs. Well, now you can stay in place. Well, good evening, everyone. I appreciate the opportunity to be here, and I can say I am relieved and excited that we are through the 2024 audit. We've made some good progress, and already trying to make progress on 2025. So, again, I'd like to just echo what the mayor said, and that is that we are incredibly grateful for the staff that's worked really hard with us, answering a lot of questions and spending some time with us to make sure we could get everything we needed. So we are incredibly grateful for their hard work. So while we are here presenting, please know there's a lot of man hours by them behind the scenes to make it happen. So, okay, well, the good news is we're done with 24. So I'm going to give you some highlights of the financials just to kind of give you an idea budget-wise where we landed and some of the financial findings, and then we'll just move on to the actual audit findings. And if you have questions, don't let me go too quickly, but I also don't want to belabor any points. So feel free to kind of tell me to slow down or explain something. I know Andy said to leave your questions till the end, and that's fine, but please don't let me run over something too quickly. So.
Ms. Stacy, if you're comfortable taking questions, that's fine with me as you go.
Yeah, that's fine. So let me just start by saying I know that 24 had its challenges, but I am happy to tell you that even though we've had some findings and some challenges, we were able to give the city an unmodified audit opinion, okay? And that's the best opinion that we can give you as an audit team. And what it means is that if a lender, a grantor, or your public citizen picks up these financial statements and looks at the balances, they're as true as we know to make them. Okay, so I always try to remind councils that we're not fraud auditors, forensic auditors, we are financial statement auditors. And what that means is my job is to come in here and pick apart your financials and hand you a set of financial statements that you can stand behind and that I'm willing to stand behind. So when I give you my opinion, that's what my opinion actually means. And that's that we've confirmed these numbers, we've tested them, we've vouched them, we've done everything within our ability to make sure that they're as correct as we know to make them, okay? So I wanted to make sure you understood that you did get an unmodified, we used to call that a clean opinion, and it's simply the best opinion that we can give you. That's what your first letter is on page 1. So let's talk about where the city landed financially in your governmental funds for 2024. On page 5, actually that's not what I meant, page 7. Page 7 is a statement of your revenues and expenditures for the year, and this is done with all of your governmental funds, and I say that because this does not include water and sewer, okay? This is your general fund, your SPLOST fund, your hotel motel, and some of your smaller funds like confiscated assets and those types of smaller funds. So that's on page 7, just making sure you guys.
We're trying to find page 7.
Yeah, I'm waiting on you, yeah.
It's red page number 16.
Okay, yeah, I'm following.
Okay. So on page 7, this takes the revenues and expenditures for the city and gives us the balance of your activity. In the business world, we call this your profit and loss. It's not what we call it in the government world. The first column is general fund, and for the end of 2024, the general fund had a deficit, so they actually had a loss of $652,492. And your SPLOST fund had a loss of $2,159,856, with hotel motel tax having revenues in excess of expenditures of $311,249. So overall, the city's governmental funds had a loss of $2.5 million for 2024. And if we want to compare that to how the budget was for general fund, which is the main operating fund, let's turn to page 9. On page 9, we take your revenues by type, essentially, and compare that to the budgeted numbers to see if we generated the revenues we thought we would, and then we take your expenditures by department. So the City of Blue Ridge adopts their budget on a departmental level. We call that your legal level of control. So that's the level that the state monitors whether or not you've exceeded budgeted appropriations. The City of Blue Ridge's policy is that you don't exceed it by 10%, but the state actually monitors that at 3%. So technically the budget shouldn't exceed by 3%. If you look in the second section of page 9, you'll see that you have several departments that have brackets, which means that they were over budget by those amounts. And we did the public works budget appears to be under budget, but because of the way we had to categorize something, it's not under budget by that much. It's actually closer to 400,000. That number is a little bit misleading. We did have unbudgeted paving. We've had unbudgeted expenditures within that fund as well. But overall, the city was over budget by $652,492 for 2024, and that's for the general fund. That's the operating fund. And you will find in the back of the report that that did generate some compliance findings. Those are state compliance findings for what we call material violations of finance-related provisions. And we have to give the city findings for departments that exceeded their budget by 10%. And the state actually makes the city justify budget overages over 3%, which I mentioned earlier. Okay, if you want to move to page 12, we'll switch gears for a second to the water and sewer fund. Again, those were all the governmental funds we just discussed. On page 12, this is your revenues and expenditures for water and sewer. The number that I like to point out first is actually your operating income, and that's before I take the unusual items and factor it into your bottom line. So your operating income for the water fund was $109,132. And you'll notice that your change in net position closer to the bottom is $296,285. Again, in the business world, we would call that your profit or loss. And that number looks larger than it actually would feel because we had some unusual items. We had debt forgiveness, And we had a few things like that that skew that number a little bit. So overall, that probably would have been a slight loss. But at the end of the day, if you take operating income, operating expenses, the water fund was in the black by $109,000. Something else I want to mention to you that you'll see throughout these financial statements, and this is new for 2024, that is the city is now required to report a liability for sick leave. This is just something that went into effect in 2024. So in these financial statements, you'll see a line a few times that says change in accounting principle. That's simply now the unused portion of sick leave at the end of the year for all employees has to be accrued as a liability. And the city could be liable for that. So the government accounting standards now require that we report that. So when you see these change in accounting principles at the bottom of the statements, it's not technically part of your profit and loss. That's us restating the financial statements to include that liability from prior years. So it's not factored into your profit and loss. Okay, if you want to turn to page 13. This is the statement of cash flows, and this statement's overlooked sometimes, and it's more important than people realize. This takes the activity of the water and sewer fund and does cash in, cash out. It takes all of the year-end adjustments out, and it tells you this is, at the end of the day, we took in more cash than we paid out, or vice versa. So with the water fund being something I know that we've, as a city, have been watching a little closely, I wanted to point out that with grant funds and loan funds and that kind of thing, we did have a net increase of cash of 1.8 million, but I think that you have to take into consideration that we had a net of about $800,000 in loan proceeds in that. But it does show us that the water fund is bringing in 2024 more cash than it's spent, and I know that's been a topic of discussion, so I wanted to make sure that I pointed that out. Okay, that's a pretty good overview of the financials in general. So let's look at, there are a few things that, well, you know what, let's just go ahead and go to the findings in the back in case you have, unless you have any questions on the financials themselves. The findings start on page 53 if you don't have any questions. And while you're moving to page 53, let me just also explain to you that this year for the 2024 audit, we actually performed a second audit, and that was your single audit. And I think that you've all heard us mention that.
Oh, okay.
Are your page numbers numbered different than mine?
We've got a red page number at the top for our whole packet.
Okay. I don't. So at the top it says schedule of findings and question costs. It starts with section 2. Okay. Sorry about that. I didn't realize your numbers were different than mine.
You can see things at the bottom.
Okay. Okay. So I just want to remind you, we did do a single audit, and that is a separate audit for compliance on your federal funding. So we do the regular audit, we look at all of your financial activity, compliance with state law, your internal controls, and then we do a second layer. And we scrutinize the federal funds alone. So these findings this year contain a second component that you're not accustomed to seeing, and that's the items related specifically to those grant programs and loan programs that were federally funded. Okay, that's something that's a little unusual for you to see. Let me remind you too that we have layers, or maybe levels is the right word, of findings. So there is what we call a material weakness. In the internal control realm, that's probably the highest level of a weakness that we can give you. And that simply means that either there were absolutely no controls in place, or the controls that were in place weren't strong enough to even detect that it was happening or prevent it. So it means you have a material problem. And these are things that we think are probably the most alarming of our findings, and so we feel that they need to be corrected, and they were significant enough in dollar amount as well that we made sure that we let you know these are probably the most severe of our findings. The next finding is what we call a significant deficiency. So these are also significant in dollar amount, or they're pervasive, but we felt like there were controls in place. It's just simply that things happened. Sometimes you caught them, you may not have caught them, but they are important enough that we need to bring them to your attention to have these things fixed, okay? There's another level that you got a second letter from us that we call management comments. These are things that we want to bring to your attention because they're recommendations. These are things we think you can improve, things we saw that we don't think are findings, but we want you to look at and research further. They're more suggestions, and they're not significant enough to put in your actual audit report. The other level that you get from us is the non-compliance with state law. So those are violations of actual state law that were material enough or pervasive enough that we had to report on them. Okay? So the first finding is segregation of duties. We give this comment a lot to small cities because you have to have 4 to 5 people in a financial capacity in order to fully segregate duties. I will say that the city of Blue Ridge does have enough employees and staff that segregation of duties is possible. So this is a finding that the city of Blue Ridge could remedy. We would just need to work on job descriptions, need to make sure that we are not overlapping in our duties, and then this could be remedied in 27 probably. We're already halfway through 26. So it is possible to remove this comment, unusual in small cities, but the city of Blue Ridge does have the staff. So we just simply wanted to point out that the segregation, there was a lot of overlap, a lot of issues in jobs being done where you've lost your segregation of duties. Just simply that an opportunity does exist when that happens for something inappropriate to happen. So we want to make sure that we do our best to segregate those duties in the future, given you do have the staff. The second finding is material adjustments of the general ledger. We're required to report to you the findings, or I'm sorry, the adjustments that we make to your financial statements in order to give them to you in this statement. So you can see in here in the effect paragraph the dollar amounts that we had to adjust through the audit in order to give you numbers that we could give you a clean opinion. So it was a lot of errors where cash was understated, liabilities were understated, and you can look through these and see. In order to remain independent, we have to disclose to you what we changed on your financial statements. So those are some very material numbers that we had to change to make your financial statements fit the form and presentation we're required to present them.
Sorry I'm late, Mayor.
No problem.
Sorry, Casey.
Yeah, no problem. If you want to catch up with us, we're on page 54.
Alrighty, thank you.
Yeah, I'll give you a second to catch up.
Go ahead, Casey, I don't want to hold you.
Okay. So, finding 2024-03. I will tell you I am still in the material weaknesses. This one is titled Failure to Reconcile and Manage Cash Activities. Cash management was a significant problem in 2024. So whether, and bank reconciliations were not performed, and they should be performed monthly, but due to the lack of cash management, it was impossible to do a bank reconciliation, I suppose. So we really wanted to emphasize, and the city's already making those strides with new staff, that the cash activity has to be posted in the period in which it occurs, and it has to be entered correctly. So just some examples. We had things that were reported in the wrong period or omitted altogether. The entries were often misclassified. We had vendor invoices that were duplicated, one of which was paid twice, and that was actually caught by the vendor, thankfully. We had payments for licenses that were held in City Hall And the staff had been directed to do so even at a later date, but that was something that we've mentioned needs to be changed. And of course, the bank reconciliations weren't done until 2025, 2026. Some things that were omitted from the system, just to give you some examples. We had $146,445 of local option sales tax that was just never recorded on the general ledger. So that's $146,000 of cash that the city had that wasn't on the books. Again, I mentioned the $29,000 invoice that was paid twice to a vendor. Fortunately, the vendor caught it, so we were able to remove that from a future invoice. We had a lot of returned customer deposits that weren't recorded in the general ledger. So that was for utilities, licenses, and property taxes. And when we totaled those, it was $16,323. And that's just for the ones in 2024. Those were not investigated or researched until much later. So management actually made the decision not to pursue collection of those. So that $16,000 is money that the city of Blue Ridge will no longer be able to collect.
So, Tacey, all this money went through the bank accounts, it just didn't get entered into Smart Fusion. Well, the 16,000 didn't, because it got rejected, the checks bounced, basically on 16,000, and there was no follow-up. So the other stuff went through the bank accounts, it just didn't get documented in Smart Fusion.
Not all of it went through the bank accounts timely,
Okay.
but eventually it did. Yes, yes. So it is our recommendation, obviously, that we work on the cash management and then the inflows and outflows of cash, bank transactions, the sub-ledgers for property taxes and licenses and utility billing are reconciled on a daily basis. Now, I will tell you there is a cash collections reconciliation done daily, but that also needs to be done with third-party vendors like credit card processing. We've found a lot of issues with that. So there's some work that needs to be done in mapping those to our software, because what we're reporting and what council's making decisions from simply doesn't reflect the cash activity. And so we need accurate information that the council can use to make those decisions and strategize and to compare to budget as well. And I will mention too that we had POs issued that were for items that were not budgeted because the budgets weren't being reviewed when the POs were issued. So just an overall mismanagement of cash. So those would be the three material weaknesses. The finding at the bottom of page 54, that's 2024-004, is employee accrued leave. Last audit, we mentioned to you that we had some issues with vacation. So those have since been remedied as far as since our last audit timing, right? 2024, we weren't here to do the audit. But since we left and reported to you in November, those things have been changed, and that's not a problem. We did find a few discrepancies with sick leave, and since this is the second year that we had an issue with employee leave, we kept it as a significant deficiency, even though this dollar amount is not significant, okay? This is more a repeat in the same area. So we wanted to make sure that the city is effectively using their payroll software so that benefits are accrued and used in the right manner, that all employees accrue the same amount according to the personnel policy, and that those are updated per payroll, okay? The one thing we did ask the staff to do when we were here last time was to activate the controls in the payroll that will warn you if an employee is taking time that they're not entitled to. And the staff thought that that had been activated, but it had not, and they checked the box while I was standing here. So that was back in October.
So it's good now.
So it should be good now, should be. So we'll just continue to look at sick leave and vacation leave, and I think the staff is already researching it. I heard from some of them today. They're researching that to make sure that it's correct, to make sure they don't have any issues. So when we roll in to do the 25 audit, at a minimum, we should know what those discrepancies are, or if there's not any at all. So those actions have already been taken by staff. So from what I understand, they were digging through it today.
Yes.
So, all right, so those were our findings on internal control that weren't related to state law. So we'll move to the instances of noncompliance with state law. The first one is 2024-005. This is a repeat finding from the 2023 audit. It is required that special local option sales tax proceeds are maintained in a separate cash account. They cannot be commingled with the general operating monies of the city. But in 2024, $70,583 of SPLOST collections was deposited in the operating account instead of the SPLOST account. If they had been moved within days, it would have just been an error, but it actually sat there for a month. And while that's a problem, you accrue interest in the general fund on that. You've commingled special local option sales tax money. So there's a couple of different reasons why you can't overlook that sitting there for 30 or 31 days. So this is a repeat finding, and we're just hopeful that we'll start putting these in the right accounts in the future. The second one is it's 2024-006. This also is a repeat finding. State law requires you to publish a schedule of the uses of the special local option sales tax funds in the paper, okay? So you're supposed to do that in the year subsequent to the audit, and the 2024 was not published within that time frame. What most cities do is take our SPLOST schedule from the back of the audit that we've already given our stamp of approval on, for lack of a better word, and they use that schedule and they publish it. And that's pretty typical. So in this situation, what might have been better is that they just created one that was titled unaudited so that they could go ahead and meet the letter of the law. And then they could have always republished one that was audited at a later date, but still been in compliance with state law. So should that ever happen again, let's hope not, we'll be sure, if the staff will be sure to make sure something's published, even if it's unaudited, so that they can adhere to state law.
So does that mean 25 was probably a problem? 26, that means it was due already for 26. We did it for 26? So we gotta wait for the audit. So we're gonna get this again in 25 and
In
then
26.
again in 26. That's gonna show up.
So that'll be a repeat finding. Okay, on the next page, another material violation of finance-related legal provisions is the hotel motel tax. It is required that both portions that are restricted of the hotel motel tax are expended quickly, immediately. Those are the words that we hear from DCA. So they essentially say immediately. The restricted portion of TCT, that's the tourism money that is given to the chamber. That is accumulated every quarter and then paid to the chamber per the contract that the city has with the chamber. We have not found any issues there. And we do have a small amount accumulating from 23 and 24 that needs to be sent to them, but it's immaterial. It's a calculation difference, and we'll work with Lisa to get that paid. So this finding does not relate to the funds that are earmarked for the Chamber of Commerce. This is the portion of your hotel motel tax related to the tourism product development. That is the money that has to be spent for the creation or maintenance of facilities. So as of the end of 2024, keep in mind we're in 26, so this dollar amount likely is accumulating. The city had $275,844 of those funds that had not yet been spent. It's technically supposed to be budgeted and spent, so we'll need to make sure that that's included in budget appropriations as well. Now, I will say in 24 there were some budget appropriations, but it just wasn't actually spent. The next finding is for the again, relates to the SPLOST. This is also a repeat finding from 2023. And I didn't mention that the hotel motel tax was also a repeat finding. This findings, the DCA Chart of Accounts states that if you're going to finance any portion of a project that includes SPLOST monies, that the entire funding of the project has to be done out of that SPLOST fund unless it's water fund. So when we do the storm drainage project actually is probably the biggest project that this happened with. Everything has to be done out of the SPLOST fund. So instead of SPLOST sending money to general fund for general fund to create that project, general fund should have sent their money to SPLOST, and it should have all been done out of there. We also saw that SPLOST invoices were being paid out of pooled cash. SPLOST invoices aren't paid out of pooled cash. They have to be paid out of that separate SPLOST checking account. So it wasn't just the projects that weren't financed in the right place, it's that pooled cash was being used to pay a lot of the fund's activity, SPLOST being one of them, which it's against state law. So we had to include the finding. Again, this goes back to our cash management issue, but it created another finding. Okay, next page. Finding 2024-009. When the city obtained the GFA loan for the storm water project, it was obtained using SPLOST funding as a match and general fund money as a match, and then the remainder of it was to be paid out of GFA. So council budgeted that and they approved it that way. 1.2 million out of SPLOST, 800,000 out of general fund, and the remainder from GFA. However, the city should have established a debt service fund that would service that general fund debt. General fund itself can't hold debt and pay debt. That's illegal, or it's against state law. So a debt service fund should have been created. During the audit, we added that fund, but it doesn't have a budget because also all governmental funds must have a balanced budget. So this finding simply states that there should have been a budget for the debt service fund in the budget, and a budget amendment should have been done to include one during 2024 when those debt proceeds were received and when repayments started being made. But the debt service fund was the only fund that did not have a budget.
Is this what we corrected?
We fixed that in 26.
A couple of meetings ago,
With the new budget.
with a new budget for 26.
Right, so
So
this will be a
here in
repeat.
25.
Yes, exactly. This will be a repeat in 25. But that was a new finding. Okay, 2024-010. State law requires that the minutes of a city council meeting be adopted no later than the conclusion of the subsequent meeting, scheduled meeting. So there was a meeting held July 16th, 2024, and the mayor and city council failed to adopt the minutes of that meeting by a vote of 3-2. It was a failed motion. So the Open Meetings Act states that it's required by state law that there is a true and accurate record of every meeting adopted as part of the city record. So that has never been done. We traced the minutes through the end of 2025 and beginning of 26 to see if maybe it was done retroactively, but we can find no proof that those minutes were ever adopted.
And that's not something we can do now because we weren't there.
Different council. Chuck might be able to answer that, but
No, that, I will say, it's the only time in my entire career that I've seen it happen, but there was not, on that particular night, the vote to approve the minutes failed, and there was never an effort to approve the minutes from that meeting. But for what it's worth, I think that's the only time we, as a city, have ever, at least in my tenure, have ever experienced that. So it shouldn't be something that I wouldn't anticipate it happening again.
I've been working with the city of Blue Ridge a long time, and I also have not seen it, so I will agree with what you said. Okay. So that covers the state violations and the internal control findings that relate to the financial statement audit. So it's the first layer of audit that I mentioned to you. The second set of findings that start at the bottom of page 57 on my page numbers actually relate to the federal funding itself. So these are the projects that were funded by GFA during 2024. Single audits are based on single audit federal funds spent, so it's on expenditures. And this, as part of the audit, what we do is take those GFA contracts and we look at all of the compliance issues in the stipulations, I should say, in that contract. There's also a federal guide that tells us what compliance items we have to test in each one of these programs, and it's specific to the individual program from which this loan was funded. So we take both sets and we look at every loan draw, we look at every invoice, the documentation behind the invoice, the timing of when contracts are released, when bids are done. From front to end, we're picking apart every piece of that project, okay? So we did have some findings related to the projects. These are material weaknesses, and that is because they are significant in dollar value and because we had more than one instance on a small sample number. Okay, two different things here. One is that an entity is required that federal funds must ensure that the time elapsing between the federal funds being transferred to the entity and the time that it takes the entity to pay the actual recipient of those funds, the vendor, that has to be minimal, okay? So they also require that you deposit that into a separate checking account in most instances. Not all federal funds do, but this funding source had the city set up a separate checking account that's not interest bearing for those funds to sweep into, and then they can sweep right back out to the vendor. It's also not a problem if those sweep into the operating account and then they're sent the same day. That's not a problem. It's not the best recommended practice. But if it's sweeping out immediately, that would not have necessarily been a finding. However, the staff did not remit payment to the vendor timely. So it was $900,000. It was deposited into the city's account in October, the GFA account. Days later, it was transferred to the pooled operating cash account, which is the operating account of the city. Those funds remained in the city's checking account, earning interest and being included in the operating funds of the city until 2025. So they were remitted in February of 2025 to the vendor. So we had several months there that those funds sat in the operating account before they were remitted. And that violates that portion of the cash management compliance requirement for the federal program. In addition, a city or an entity cannot retain over $500 of interest earned on federal funds. In doing a quick calculation of the interest that was earned in that time period, the city actually earned, again, this is an estimate, $7,486 of interest that they are still holding because the finding was just found. So the finding was just done. So I will say that the $900,000 was not the only draw. We had another draw of $210,000 that was received in November. So a month later, fortunately for the city, that $210,000 stayed in the separate federal funds cash account. It stayed there again until both the $900,000 payment and $210,000 payment was sent to the vendor in February. So $1.1 million of federal funds was held by the city for a long period of time before the vendor received payment.
So do we owe that interest to the vendor?
I've instructed Lisa that we're going to contact GFA to see whom they deem receives that money. Some federal programs, they require you to send it to the U.S. Treasury, and some, they're paid to the vendor. So we're going to have to get GFA's direction on which entity they want us to pay that to, and then we also need to make sure that a calculation Lisa gives them is correct and they accept that before it's paid.
Will you repeat this single audit in 25 on these projects, or this is over? So will this show up next audit or not?
These findings won't repeat because they are specific to 2024. I don't know yet because we don't have,
We don't know if we hit the number. 'cause
We don't know if
it's
we
based
hit.
on the number.
so, and the other thing that's helpful is that the single audit threshold changed to 1 million. So we would have had to have spent 1 million in 2025. There's a chance that that's the case, but we are still, the 2025 books aren't to the point where we can give you that dollar amount. Okay. So my answer is it could happen, but it may be with different funds, right? But it won't be this 900,000 and the 200,000, right? It may be the program, but not those specific draws. Because the finding I just told you about is what we had to give you a finding over internal controls, and that is that the project managers here at the city, that staff, had a lapse in internal controls and the fact that they did not get those federal funds timely remitted to the vendor. The money sat in the operating account, so that's a breakdown in your internal controls. But for federal funding purposes, it's also an instance of noncompliance for a major program. Okay, that's kind of the equivalent of an instance of noncompliance with state law, right? There's a contract, it stipulates what you have to do, and this finding also created an instance of noncompliance for the federal funds. So this second finding on page 58 gives you those dollar amounts in more detail, but those are the ones that I just explained to you. So it was $1,125,044 was the amount not remitted to the vendor. And again, we state the $7,486 that the city potentially owes to either the vendor or the U.S. Treasury. Any questions on those?
So in your 2024-008, it shows SPOS fund owes 2.1 million to the general fund. Is that just sitting there and needs to be moved?
Yes, is my short answer. Yes. So this is, this relates to the project where you got the finding that a project has to be completely financed within the SPOS fund. So those SPOS expenditures, part of that is that project that they owe, that the city's general fund paid more on that project than was budgeted, and that would have been derived from SPOS funds, not general funds. The other side of that is there was a little over $1 million done in paving in the general fund in 2024 that was not budgeted. It was approved by council, but wasn't budgeted, and that was a use of SPOS funds as well. So during the audit, the staff made the decision with the mayor that the SPOS could repay general fund since it was a specific use of SPOS, and those are restricted monies. So it, in their opinion, made sense for SPOS to use their restricted monies instead of the general monies that could be used to operate the city. And that would pretty much wrap up the 2018 SPOS. Am I right, Eric? That should use the remainder of the cash that's still sitting there from 2018, because at this point we have the second referendum for SPOS that's collecting.
You said $1 million, it wasn't budgeted?
Correct. It wasn't budgeted, but it was approved. It just was not budgeted. Okay, so if you don't have any other questions on the findings, I mentioned to you earlier that we give what we call management comments. These are recommendations that we give you just for things we think you need to research. Those are sent in a separate letter. Okay, this letter is given to the mayor and council, and it's given to staff, but it does not go to the state because it's not part of their audit. This gives you more detail on things that may have changed, like the sick leave. It's a letter from us to governance to kind of tell you, hey, here's what we did. Here's all the journal entries that we made. This is how it affected your financial statements. And we restate in here our original findings and maybe give you a little more info as far as you might look at this. Make sure you activate the button in the software, for instance. Those types of things are in here. We also give you a breakdown of what funds are owed to each fund so that you'll understand the purpose of those. That's on the bottom of the third page, and that goes along with Bubba's question. So that shows you where we are telling the staff that we need to move this money. But there were a couple of things on this letter that are not in the findings that we wanted to bring to council's attention as well. And that's on the last page of the letter. The rest of the findings are going to sound familiar. They are just short blurbs with a few other thoughts. On the last page, one of the things we noticed, again, if it's in this letter, the dollar amount's not significant, and we didn't think it was pervasive enough that we had an audit issue. So I just want to reiterate that, okay? So the first one, we would like for the staff to research the amount that's being withheld from employee checks, for benefits, for gym memberships, for those types of things, and make sure that those amounts coincide with what's being paid in the vendor. What we think may have happened is that those amounts change as they do. Insurance renewals, vision insurance renewals, those dollar amounts may have changed, but the amounts coming out of employee checks may not have been changed to reflect the invoice changes. So we're asking staff to start in 25 now, even look back at 24, which is the first time we've really noticed that gap growing, and say, okay, we need you to go back, make sure that what you pulled out of employee checks is what you really paid the vendor. If you owe those employees money back, let's make sure we restore that to them, and then the city can decide if it goes the other way. That's management's decision. But we think that it's a problem that we see the dollar amount growing, and so we want to make sure that that is researched by staff. The second comment on this page also did not warrant inclusion in the audit report, but we would like to encourage council to pursue collection from the Housing Authority for the tax payment. We call it a payment in lieu of taxes. So the Housing Authority has a calculation that they do, and they pay the city a payment, we call pilot, in lieu of paying property taxes. There is a contract that does not expire until it's 2050. Don't quote me on that date, but it's a really long time from now. So that tax has not been collected since 22. So we are missing those revenues, but the city is due those revenues. As auditors, we don't have a way to calculate what that is. So I don't have a way to include that in your report as a liability. But based on prior years, we didn't think it was significant enough to be an audit finding, but we want to strongly encourage you to pursue collection of that because the city is due that money from the Housing Authority, and you do have a valid contract in place. So everything else in this letter, like I say, repeats the findings with a little different information, gives you some thoughts on our journal entries and those types of things. Any questions for me?
I'll ask a few questions. I appreciate you wading through all this for us and sorting out at least all the work that you've put in to getting us to where we are, that we're at least up 24 and we've got the ability to turn to 25. And so I'm going to ask about 25.
Okay.
So we got an extension to December on the 25. So what do we think the realistic timeline is to get 25 cleaned up and
Okay.
audited?
So the mayor, Eric, Lisa, and I had a conversation a couple weeks ago as I was delivering the 24 to them. And let me give you an update even since we've had that conversation.
Yes, please.
Is that okay?
Yeah,
Okay.
yeah.
So what we originally said was we were going to continue, since it was fresh on our brains, continue this proof of cash that we had to do for 2024. We wanted to roll right into 25. Already in the dirty details there. So the city was asking us to have that proof of cash so that they had good cash numbers to start with by the end of July. And at that point, we would turn it over to Lisa and her staff, and they would work on doing the year-end entries, getting the books closed, booking loans, all of those year-end entries, with our hope that we would start the audit by September. Did I say that correctly? Okay. The good news is that Sarah, one of my staff members, spent a considerable amount of time in the last couple of weeks, and she's already given Lisa and her staff the entries, well, not entries, that's not true, what she has flagged as things that she needs them to research, and we are very close to having cash finished. So we're a little ahead of schedule. So that's good news. What we would love to do is to issue that report by the end of October. I don't know that that will happen. I do not make that public promise. That is what the mayor has asked us to do. Now, what I will tell you is that your audit's due by December, and now it's legally due by December. That was important.
We're out of the position we were in. We're now at the acceptable spot with the state.
That's my understanding. Now that you have an actual extension, your audit is not due until December 31st. So you are no longer out of compliance with state law on your audit. So we are going to work really hard to get that done as quickly, but the good news is it's not actually due until December 31st. But we would love to deliver that at the November meeting. So that's what we're working towards, but we're kind of bound by what we find.
And based on everything in 25, we got new starting positions for 26. It'll take a little bit more time than normal to get to 26, but we shouldn't miss June of 27. This deadline.
I would certainly hope not. We're off to a good start.
Okay.
That's a lot of pressure for me to say from a podium for Lisa. So,
We're getting close.
Again, no
We're
public
getting
promises?
close to having clean numbers.
very.
So the 25 audit, we're going to see a lot of these exact same findings again
Potentially.
because we didn't correct them in 25. So, but in 26, this should disappear.
It's
Not completely.
not completely,
Not completely.
right, not completely. But I do feel like when you hit January 1st, 2027, you could probably confidently say the worst is behind you, right? 26, we're still working on 24's audit. We're still working on 25 audit. And everything that we find in 24 and 25, they're going to be scrambling to fix in 26.
Right.
So if you think about the way that timing works. So I wouldn't say that 26 will be without some of these findings. But when you start 27, the audit should be caught up. We should be able to fix 26. So 27
Should be
you should start off on a clean foot.
And, just to make the statement, Bubba, a lot of the policies that we've been adopting lately over the past 6 months have been a reaction to some of these findings to help us go ahead and get in compliance. So we're working ahead of, we're working ahead of this, and also with internal procedures, a lot of the cash stuff are already kind of working through and talking through systems and, checks and balances internally to keep us straight too, so.
That's true. That's all?
Sure.
Well, there's no reason to dig into the numbers. I went through them with Eric the other day, so I got most of that answer already.
Oh, okay, great. Any other questions for me?
All right. Thank you very much, Stacey Joe.
You're welcome. We appreciate you. And so we are on to Better Things in 25, right?
Yes, ma'am.
All right. Thank you. And I'm going to scoot out if you don't mind.
Thank you. Yes, ma'am. All right, the next item on discussion for tonight is the utility extension policy. We've talked about this in a past workshop. Over the past month, we've received a great deal of feedback from the community and the council on this item. Eric and I have also met with Jamie Hensley and the county and talked about, you know, our policy and what that might look like for them and if they had any concerns. And just we're looking at this policy as our community continues to grow. The utility capacity is an important public issue, and so really concerning the larger developments outside the city, rely on city water and wastewater services. And at this time, I'll ask Eric if you want to explain some of the updates that we've made and maybe some of our discussion we've had.
Yes, thank you. So we met with the county, as the mayor said, and they expressed some concerns. The first one is the county clearly agrees with the city that there needs to be some policies in place as it relates to water and sewer capacity servicing these unincorporated areas. Their concern is if you look at the policy, they're fine with the purpose, section 2. The general policy where it says annexation is encouraged, they do not like the fact that there would be some type of forced, this is their words, forced annexation in the cases of where the city would require a development agreement for new development outside the city. So that's a concern on their part. And what he expressed there is that there's a possibility of them losing funding for their fire and EMS services. We expressed there's probably some ways to supplement that and try to rework that, but that's something he's looking at, and that would be subject to further meetings. Some of the positive things were they agree with the development standards for landscaping and buffers for whatever the city has. They would like to apply them outside the county as well, even though the county doesn't have county zoning. So that was positive. They also agreed that they would share site plans and their proposed building plans for anything that would hook into the city system in the future. Obviously, all the capacity and infrastructure requirements that are outlined in Section 5, I don't think they had any issues with that as well. So really, the two big issues is the annexation and the requirement that there be a development agreement. And one of the other things he expressed, he would like to discuss possibly setting up a service area for outside the current city boundaries that could be looked at for annexation, but he would like to hold those discussions to the loss discussions next year, which is up for renewal actually negotiations would occur in 27 and then would go into effect for 28. So that was one of the things that he would like to use that spectrum to discuss the infrastructure. So that's basically an update. I'm sure there's going to be further meetings, and obviously we would welcome any input that the council has.
And I think the way when we left, you know, we wanted to bring this back to you guys, but Jamie was also going to take this to the other commissioners to kind of get some feedback, and then we discussed having a roundup meeting after the fact, after we both meet and talk. So, but I felt overall that it was a really positive meeting.
So some more discussions required.
Yes, sir. Yeah.
So I just want to say what we're attempting to do here is take the Publix project, for example. There's 30 acres behind that. If apartments got built on those 30 acres, the city doesn't get any property tax from that because it's in the county. But yet we got to provide the water and the sewer, and we're sitting on $22 million in water and sewer debt. It is unbelievably unfair to the city residents that they fund that portion of our world, and we don't have any say on what goes on property that's joining the city. We're not trying to take projects that already exist and make them come into the city. So if they're already here, we're not talking about that. But if someone goes out by Tractor Supply and builds an apartment building, and it joins our current city boundary, it touches our current city boundary, then we should have some ability to collect property tax on that project. It's not fair to everybody else in the city that they pay property tax So if I own an apartment building in the city, I pay city property tax, but somebody's across this imaginary line, they got water, they got sewer, they come downtown, park, use the parks, do everything, and they don't pay city tax. It's just not fair. And that's all we're trying to get to here. If somebody builds a major project, a hotel, an apartment building, a retail center, and they have to have water and sewer to do that, it's not fair to the city residents to not be able to participate in that and collect tax revenue.
I think, Bubba, too, when I'm looking at this policy, I'm thinking about the immediate border, the 2 square miles, our immediate border line, where we have zoning and we have rules and regulations, and the county does not. If we don't have some sort of a utility control, everyone will just go right outside the border and build up, whatever.
Right, so we have, in C2 on 515, we have a 30-foot height limit. But somebody can go down by Tractor Supply, it's basically the same property, and build a 6-story hotel down there. We don't have any say in that, but we gotta provide water and sewer. That's the problem that I want to address, and it's not fair to city residents that we're shouldering the water and sewer for that and not collecting property tax on it. So that's all. So I hope you and Jamie get together and spend some more time and go through it. We're not trying to annex houses that are on our water. We're not trying to annex projects that exist already. None of that's true. That is not what this is about. This is future projects that join the city.
No, and I think we clearly explained that to him as well.
He's fine with, or he's thinking that he's okay with it, just not in residential, but he thinks that, like, adhering to some of our ordinances and stuff would be good, like as far as like,
Well, they particularly mentioned the buffers and signage and, what was the other one? Landscaping.
is there a way that we can go ahead and implement those things and get that going, just because, I mean, there is a 6-story hotel that is going to come in to where that is, I mean, that's altering.
I think our best bet is to look at the utility extension as a leap forward to that service delivery strategy, big conversation. I think this is the first leg of that. For us, this would be the fastest that we could move on any sort of a deal, I would believe.
It is a community. My objective would be to expand our water and sewer capacity into the community as much as we can. I saw a post of somebody's well had gone dry last week, and if there's a way we can expand our water and sewer to places we're not, and it gives people opportunity, I think that's a positive for Fannin County, for Blue Ridge, for everybody, if we can do that. But we're not talking about if you're in Mineral Bluff and you're on our water, that we want to annex you into the city. That is not what this is about.
He seems to be more worried about the residential part, not the commercial part.
Not him, just some other people. Jamie's not worried about it.
Okay.
No.
Yeah, we also talked about, Chuck, you might could elaborate on the annexation being encouraged for some places where it makes sense, if it's an apartment complex. Is there anything that you see that would be an issue with just saying that it's encouraged, that not every property that's touching the city would have to be annexed, but maybe some?
Yeah, I mean, I think we would have the discretion in a situation to provide our water and sewer and not necessarily annex the property. And, I mean, keep in mind that, there are also state laws that govern annexation. And so it's not like we could just necessarily cram something down Fannin County's throat.
Yeah, it's going to go through a process
has
that's
to
beyond
go-
our control. There's a lot to it.
A very arduous process. And so, the county, there is some protection afforded to the county under state law. The other thing that, overlaps all of this discussion will be the service delivery strategy and those kinds of things. So, yeah, I mean, I think, and this is not uncommon, this kind of policy for municipalities who wish to provide water and sewer outside their corporate limits. Very often, for the reasons that Bubba mentioned, they want to at least reserve the right to have the property annexed into the city as a condition of providing that service. So, what I would say, and I don't know if this is directly answering your question or not, there are protections afforded both sides. standards, both the county and the city as it relates to annexations and this policy, so.
Thank you, sir. All right. Any other questions about this? One other thing that we did talk about was the no service to data centers and taking that and being a little more specific with the rules that's required, the amount of water that could be allowed, instead of just saying no, you know, put parameters in place that would make it difficult.
Yeah, because it's definitely been a concern from our community.
Any other questions? We'll continue to, you know, have discussions about this. We'll keep you guys updated. Hopefully we'll put it back on the next workshop as we continue to work through it. The next item on our discussion relates to the changes to our land use code, which is essentially the city zoning and development rule book. When we discussed this at the last workshop, we received a great deal of feedback from council members and the community. We took that feedback and went back to the drawing board. At this time, I'll let Eric present the new draft.
Thank you, Mayor. So in your package, you have the draft document. This incorporated any changes we made at the June workshop meeting and any suggestions since that time from council members. So the first section is in 140-17, which is the appearance standards. We scaled back a lot of the requirements that the council had some concerns with that they expressed at that meeting. Just to go over some of the things, the color, mandating certain colors was eliminated. The size of the minimum floor area of a dwelling unit for multifamily was reduced to 750. We provided language about metal panels and what percentage it could be of a building on the exterior. And basically some of the other changes that the council had asked for at that meeting. So that takes care of the appearance standards. And then there's been some other suggested changes. One is in R3, which is the high-density residential district regulations. There was a suggestion to increase the height from 30 feet to 35 feet and increase the density. This would be on new zoning requests from 7 units an acre to 10 units an acre. And this would address the need for more housing opportunities that are affordable to the local community. Just as a note, prior to 2023, there was 10 units an acre for new development. So that was changed in 2023. And then we go into section 140-341, which is permissible and conditional uses. There was a suggestion to remove go-karts and motorbike track. That would be eliminated as a use. And also hotel motels as a conditional use in the CBD zoning district would no longer be allowed. That was another suggestion. And then we spoke at the last meeting about signage. That's in 140-470, prohibited signs and devices. So pole signs would no longer be allowed on 515 or Blue Ridge Drive. And in their place would be a raised monument sign. And that would be allowed in those areas, but they could not exceed 15 feet. Also at the last meeting was a suggestion to start it off at 10 feet, so that was brought up by Christie. So these are the changes that we discussed at the last meeting, and also any changes that council members reached out to me to put into this document. So you have to answer any questions or turn it back to the mayor.
Any questions, comments here?
We're gonna continue the discussion on this, correct?
Sure, let's do it right now.
We do it now, yeah.
Yeah.
Okay, so for the R3, my suggestion actually was just per unit for the square footage of being 750 square feet. I'm not comfortable of us going back and moving back to the 10. And my reasoning is because general feedback from our community is they do not want another subdivision here in the city limits. And currently right now, I mean, we do have an existing subdivision that's, you know, sitting on 0.10 acres each lot, very, very congested, and we're not wanting to see that again. So I'm not sure where, I don't recall having the discussion in the last workshop where we were wanting to go back to those 10 units per acre.
Yeah, that was new, because based
Okay.
on, yeah.
I'm not comfortable with that. I'm going back to that.
So what's the difference in an apartment building versus the overlook, right? The overlook is houses and duplexes and some triplexes, right? But if you built a 3-story apartment building, hitting 10 units an acre is a trivial number.
What is the
Right.
difference?
I don't
So
understand.
how does this distinguish? So affordable housing's been a big issue. I wouldn't call Overlook as affordable housing in
No,
terms,
no,
in
no.
terms of that, right? It's not in those lines. But let's say I wanna build an apartment building. To be efficient, to be able to get that affordable, I need to build 3 stories tall, and I need to build 2-bedroom units in 750, 850 square feet. So when the height got dropped from 35 to 30, that meant I can't build a 3rd story, which drives my cost up. When the size got bumped from 750 to 1,000, that meant it's a 1/3 more expensive to build the apartment because I've got to build a 1/3 more square footage. And then when the density got dropped from 10 to 7, that also increased my cost per unit significantly. Okay, so those were all 3 things that went 100% against affordable housing. So how does an apartment building differ from the Overlook in terms of units per acre? If I build a 3-story building and there's 4 on each floor, I got 12 units, and the footprint's not actually very big to do that. So if I've got 4 on the bottom that are 1,000 square feet apiece,
So
that's
you also
4,000
gotta
square
look at
feet
lot
out of,
size,
out of
there's all
acre.
kinds of components that go into it.
So how does the 10 come into play if someone wants
So
to
if you
build
have,
an
if you
apartment
have, you
building?
have to look at it from the standpoint, if you have 1 acre, the way it is now, this will be only on new development. You can only have, if you, for a zoning change, 7 units on that 1 acre.
So
Right?
7
So-
apartments?
7 units, whatever it is, 7 units.
So a duplex.
7 residential units.
So a duplex.
Because it's R3, could be single family, could be duplex, triplex, any of those things.
So what you're
Multifamily.
saying is we could have 7 duplexes on an acre of land.
No.
7
You could have
units.
7 units.
7
You
units,
could have-
which is basically,
Right, and, but there's all other things that come into effect. You've got
What
lot
about the
sizes
setbacks?
and you got setbacks.
we've got
So-
the
so you
setbacks,
gotta
so
put
we
all
don't
those
have a
in.
full acre to work on.
Right,
Yeah, they're,
We
right.
don't have a full acre.
But
to
if you
work
just talk from a strictly zoning standpoint, I think that's what Bubba's
Right.
point was.
So you're saying 7 units, so I could have 7 triplexes on an acre?
on. No.
No.
7
So
units.
just 7 units,
Units.
so on an acre, the most I could have is 7 apartments. Right?
7 units, I mean, you wanna say apartments?
understand.
Well,
Yeah.
but
Right.
an apartment,
You're talking
an
about
apartment in a
attached
5,000 square foot house is a way different thing.
You're talking about attached units.
Yeah.
One building with
An
3
apartment
units or
building.
4 units or 5 units. in it.
Yeah, an apartment building.
Right.
is there a way for us to, I guess, separate, if there's no way for us to just
I
separate?
would think we can, because-
Versus like the way
So-
the subdivisions are.
So an acre's 44,000 square feet. If you put 7 1,000 square foot apartments on there, you're not even using 1/3 of the space.
Well, then
You're
you've got
using
parking
20,
setbacks
25% of the
Yeah,
space.
there's-
So if you're trying to build
You've got
affordable
parking and
Right,
units,
setbacks.
right.
yeah, you got parking, yeah, sure.
And setbacks.
And setbacks, you
Landscaping.
have issues.
Yeah.
Right.
You have issues, but that is a really small number of apartments in that space. So if we're trying to allow someone to do something more affordable for people to live in, which I think is very important, all these restrict that. Okay, so if that's what we're doing, okay, that's what we're gonna go down that road. I mean, they already reduced it to 7 a couple years ago. Or increased this footage to 1,000 a couple years ago.
I disagree.
Dropped the height to 30 feet, which means you can't possibly have a 3rd floor.
I disagree with 1,000.
So,
How many of you went to Panama City Beach and stayed in a condo? Most of those are 600 or 700 square feet.
750.
So they're not tiny homes. The tiny homes like the buildings you buy over here at Home Depot. So I don't think we need to start
I
them
think
at
the
1,000.
that square footage, that was the national, like, it's a national average.
But if somebody wants to come in and build a 750 square foot home because that's all they can afford, who are we to tell them no? And then
I'm more
again, it's-
concerned about apartment capacity, because what I hear most is, from my students, I got students, they don't have the ability to live in this town. Whether it's inside the city or outside the city, they don't. And it's an apartment capacity problem.
But we can't
So
fix that
we
problem.
can't, but we can't make it harder for somebody that wants to build affordable housing to build it.
We didn't
So
cause
there's no
that
way for
problem
us to
though, Bubba, we
separate.
can't fix it. We can't
can't
fix
We
the
can fix the
problem of
height,
affordable
and we can
housing.
fix the square footage
Complex
to
is
give
not
them a
supposed to
better
be
chance.
That's what I said with 750.
Yeah,
I agree.
Give them
once
a
you-
better-
once you give them that
I just
time,
wanna
yeah.
make sure on apartments that we're not being so restrictive, that everybody looks at, there's only a couple R3 places in town right now. I mean, there's really not much R3 out there at all. And if somebody
Well,
wanted to put an
those that are
apartment.
zoned R3 are at 10. This is for
So
anybody.
they're
coming-
grandfathered
they're
in.
grandfathered
They're
in.
grandfathered in. So this is
This
just
is just
going
going
forward.
forward.
Right,
New
a new
thing
application
where-
for a zoning change.
Yes.
I thought 23 changed it to 7
For new ones,
For new.
for,
For the
for,
new one.
for any
new
new.
application.
So if somebody wants to go from R2 to R3, it'd be
Now
limited
they
to
would have to
7.
follow
So
this. Yes.
anything currently zoned R3
Grandfather.
is,
Grandfathered in.
it was grandfathered in before 2023, is still at 10. So if somebody in R2 wanted to swap to R3,
They would have to follow.
they'd have to follow the 7.
Yes.
We're
Currently,
talking about
yes.
something that's already been developed, right? In other words, there's an existing structure there.
No, this will be for new construction.
But, well,
I-
just a caution, I mean, it would only be grandfathered if we include a grandfather provision. Otherwise, and we confuse these terms a lot,
It doesn't
There.
automatically grandfather.
they're related. There's vested rights, and then there's grandfathering. What grandfathering means is that there's an actual provision in the ordinance that says for properties that were zoned X as of this date, the old rules apply. That's grandfathering. But for vested rights, you have to actually do something in reliance on the existing ordinance to vest your rights, spend money, get permits, whatever the case may be. So I just want everybody to understand that if there's not a grandfathering provision and there's no vested rights, if we do change the density, it would apply to properties that are in that zoning category.
That hadn't pulled a building
That
permit.
hadn't pulled a building permit unless we grandfather.
So
So
in
you want-
23, they did have a
You wanna go from
grandfather.
7?
Was there a provision? in there?
Yes.
Okay.
You wanna go back to where we were, 10 years. Correct. And you wanna,
I think there should be a difference. A project like the Overlook, that's single-family homes and duplexes, I think there's some
I'm
triplexes
with you
stacked
on
on top
that.
of each other.
He's saying we can't.
That's different from an apartment building. Okay, I mean, on East Second Street, there's some 4-unit apartments there, there's 2 of them, there's 8 sitting right there side by side, I don't think they're a problem, and they're nowhere near an acre of land. I mean, they may be a half an acre of land if they're on, they got water and sewer, and they got plenty of parking. So I think there needs to be a distinction so that people have the ability to build some apartment type accommodations that are more than a duplex or more than single-family homes.
I think what he's saying though is we can't. Right?
Eric,
Well, so you're saying, we're only talking about R3. So you just want to give some type of additional capacity for apartment building?
I mean, if we want people to have a shot at building something that's not as
So most of the
expensive.
time when they would use R3, it would be for apartments, it's multifamily. That's what the zoning category would be.
apartments and duplexes, right?
So if someone was gonna do, yeah,
But Overlook was R3.
Yeah.
I can't tell you how that happened.
Yeah, but just for
don't
example.
want
I'm not asking you
Yeah.
how it happened, we
Right.
just don't want it to happen again.
Right.
And that's
So,
the way
so
I
right now in
envision
our,
this.
that couldn't happen again. Correct?
They could do 7 units per acre currently, that's
Yeah.
the current rule.
So you have an acre of land, they can put 7 houses on it.
Understood. But it would be limited to 7. If we go with what Bubba says, it's going back to 10.
Yeah, which I don't wanna do,
Technically, because
I don't
there would
wanna
be an
do for
overlook,
that
right?
type of project, that is too dense.
I understand, I'm just clarifying in my own head.
Yeah.
Am I correct in what I said? Overlook could happen again if we go back to 10.
again, you would have to approve a new zoning application. So this is for new zoning applications. So as you as the city council don't want to approve that application, let's say they came in with a project like that and they want R3 and they want to get that type of density, you could deny it. But if someone came in with an apartment complex and they want that type of density, you could approve the zoning change. This would only be for new zoning.
Is that lawful, Joe?
It's what?
What Eric just said.
All right, I want to make sure that I understand. Are we talking about,
Can we discriminate against an apartment complex?
well, I mean, I hesitate to use the word discriminate, but tell me what, are we talking about an existing project, or are we talking about something that's being proposed?
Something being proposed.
So under the current R3, new application came in, okay? And they want to build, they want that density of 10 units an acre, but it's not an apartment complex. It's similar to what they're saying. It was a housing development that was built with very small lot lines.
Right.
Okay? As a council, they can deny that as a project. That's what I'm saying. But the next week or the next month, an apartment complex came in and wants that same density of 10 units an acre, they can approve it. It's
Yeah.
a case-by-case basis.
Yes, is the answer to that. And
They would
also
be
keep
asking
it,
for variance to the 7 units.
Let him finish.
but, and I think Eric was making this point a while ago, and I know I'm telling you things you already know, but, I mean, when we're talking about density, that's kind of the default position, right? You're talking about maximum number of units per acre. What that doesn't factor in are setback requirements and other requirements that we have. And so if the proposal is for a single-family development, they may or may not be able to get the maximum density on an acre because they can't meet the setback requirements and all that and still get that density. Whereas an apartment complex might, again, depending on all of those other factors. So, but to Jack's question, yeah, I mean, there are reasons to treat single-family different than multifamily from a density standpoint because of all of these other things we have to factor in: lot size, setback requirements, minimum road frontage requirements, and all that kind of stuff. So there are reasons why you do treat those things differently, or can treat those things differently.
Okay.
So
Well,
we can think about this a little bit.
Here's something I think we could do. What if, Eric, you and I took this feedback and built some examples of what we take an acre of land, and we build a couple of examples and show you based on that 7, based on that 10, and then we can kind of look at it from a more visual standpoint.
Yeah. So, for example, if somebody had 5 acres and they wanted to build apartments,
Yeah,
then with 7, the most that they could put on 5 acres is 35 units, which is a pretty small number of apartments in an apartment complex, right? I mean, if you go up McKinney Road and look at Tech Lynn and what he's got there, he's way denser than that. So, some examples would be nice.
okay. Well, let's do that.
Yeah, that's a good idea.
I mean, there's other possibilities that you can look at. You could take single-family out of R3.
Oh, that's another.
Oh, that's
place
it.
for us to
Okay.
See, that
Yeah.
would make more
Yeah.
sense.
Yep.
We wouldn't end up with a subdivision.
You couldn't build
You
7
couldn't
single-family
build-
dwellings on
Yeah.
on an acre in R3. So if you had R3, you'd have to build 1. And if we set the minimum square footage to 750 feet,
Yeah.
then you'd be able to build 750 to 10,000 if you wanted to.
I just think,
Long as you fit within the setbacks on that acre of property, correct?
Correct.
you could, if, say I own a
See, I don't
piece of R3 property, I could still build, like, if I just happen to own an R3 piece of property, I could still build a single-family home.
You can build a huge single-family home on an acre with parking, easy, with the setbacks.
Okay.
You can build a 10,000 square foot home there probably if you wanted to.
You can increase the minimum lot size in R3 for a single-family home, which would eliminate smaller,
With those.
smaller
what I'm
lots.
trying-
I like the idea of some examples, just so we know exactly what we're
And you can
signing
incorporate
up for.
the R3 removal and
Yeah, think protecting
Yeah.
residential areas.
Because I think, yeah,
Extremely important.
I think
where
that-
that is.
Correct.
Like,
when it comes to like a, affordable housing and apartments, like I'm with Bob a couple months ago, we had conversations with Eric, like how we can basically provide a solution for it. You know, there's a lack of affordable dwellings here and within the city.
But what are you gonna, nobody's gonna come in and build an affordable housing project
Exactly.
because
Yeah.
But we could-
nobody's gonna lose money on it.
Yeah, but we could make it a little bit, in my opinion, we could make it a little bit more attractive for people to want to possibly do that.
would that cause more traffic and stuff in the city though, or in the residential
I think that's
area?
just, we were just starting that conversation, right? Like, you know, it'd be nice for us
Yeah.
to have those examples and, you know,
Yeah, this is
yeah.
just a
and kind of
conversation.
look at- This is just a conversation.
Because we all want affordable housing, but you gotta find the persons willing to come in and put the money into affordable housing.
Right.
If that's not gonna happen, we need to put it back in the citizenry. When they come, we can't hit them with, especially with the square footage of building right now. Trust me,
Yeah.
I'm remodeling one, I can tell you. It's not
Can you
cheap.
pull up the zoning map? Is it possible to put that on the board? Let's talk about conditional, taking out conditional use of, hotels and motels in CBD. We've kicked that around, that's how it got on this piece of paper, so. I mean, I'm not opposed to doing that, as long as we understand what that means.
Where we're gonna put them. Where you gonna put a motel if it comes in?
C2,
a good one.
and keep it in C2.
But that's kind of in residential.
No, there's a lot on 4-lane too.
Well, I'm thinking about
Satellite.
4 lane.
There's a lot on the 4-lane, C2.
Because after kind of looking into this yesterday, and doing the research on it, it does not make it sense for us to continue to allow it in CBD because of the congestion. I mean, realistically,
So,
Hey, while she's pulling that up,
I don't think it's feasible.
would you guys mind if we took a 5-minute recess?
No problem.
Okay. All right, let's, do we need to vote on that, Chuck?
Yes.
Okay.
You're welcome.
Let's take a 5-minute recess.
You
and
can
we'll-
use the bathroom if you
Are you guys ready to start back? All right, let's go ahead and proceed. Bubba, you were talking about the CBD zoning for conditional use for hotel motels.
So I think the push to remove hotels, motels, and CBD would be to get hotels and motels to no longer be even possible inside downtown Blue Ridge. The reason I'm gonna pull this up is the properties that are possible today that could be a hotel, we're dealing with one soon, I believe, on Breakfast Parking Lot. There's a request out there, and there's a request on the property that's a little bit north here, that's currently zoned manufacturing for a zoning request to CBD and with a hotel. And then the only other CBD property that's large enough to do something with is the property on the corner of Cook Street and West First that's CBD. But, I mean, when, sorry, I couldn't come up with it. When. So outside of that, there's very, very little properties on CBD that would even have a slight chance of being enough square footage to put even a small hotel, okay? But if you go down to a little south of there, C2 on the other hand, you've got Davenport's Woodyard. There's a lot of C2 property that is inside the downtown area that's also conditional use hotel. So if the objective is to not have hotels inside the city of Blue Ridge ever again downtown, it can't just be about CBD. It's got to be about C2 also, because of how the property is structured and everything. So if we're going to do something like that, it has to be thought out so that the actual objective is there.
So,
Okay.
So you're trying to keep I asked her to blow it up because I couldn't see it.
This is the
But yeah, you can, okay, that's the drive-in.
Yeah.
But around the drive-in is a residential area, correct?
It's our,
Okay,
It's all R3.
all right, so across from the drive-in is all R2 there, right? Now move to your right, move the screen a little to your right, take it that way. What is all that right there that's residential?
here,
Uh-huh,
I think that's it.
That's across the street from
That's
the highway.
Doxall Street.
Okay,
Yeah,
so-
that's
okay.
Doxall Street.
I can't really see what I'm looking at, I
So-
apologize.
It runs right beside the, old lumber yard.
yeah.
Okay.
So
Oh, yeah.
the orange right-of-way is the railway.
It's C2.
And then the
Okay.
C2 to the right of that is the Woodyard. All of that property in there, it's essentially downtown, right?
The thing.
So eliminating CBD probably doesn't accomplish the goal of no more hotels in downtown if you just deal with CBD. So if the goal is to get rid of them completely and not have any opportunity ever again, it can't just be a CBD issue. It's got to deal with C2s.
I agree with that.
Okay, just from the fact of how it's zoned right
But
now.
but what we have to do is try to keep the motels off the residential areas.
So, yeah, can you go back, I guess,
So here's the drive-in.
yeah, can you go
Okay.
back like towards where City Hall's at?
And the rest of that blue is R1, correct?
Blues are one,
And red is C2?
So
C,
this is-
C1, red is C1.
So this is what Chrissy's bringing up right here, though. Look at all these R1s. They're right here through College and West Second, and you have this giant parcel right here that's on 515 that's C2. Why would I want a hotel buffering all of this R1?
So I feel like I do it different.
How is that protecting residents, is my
Yeah, I don't-
question. If we're gonna keep it in C2, how is that protecting anything?
I understand, and that's
Not just as a
exactly what I'm
prime
saying as
example.
well. You know, you wanna pull something out of CBD,
But where else can it go in C2?
well, that's what we as a council have to sit down and figure out, because what we don't wanna do, I see a lot of red right there, I see a spot zone right there of, what is that, R3, C2 right up there, the orange?
Yeah.
Now, that's sitting right in the residential area. That can't happen again.
Our zoning is all over the place.
It is, and that's what we gotta make sure.
That's the thing, and I'd
I
like
don't
to see it.
disagree with Bubba,
Me
but I don't
either.
think that we can challenge this and fix this and face this in one meeting.
No.
Because we need that blown up in front of us on a board somewhere that we can sit down and see where we believe is the best place to, if another boutique motel comes in, where it goes, to keep it out of the residential areas. And I'm just gonna be honest with you, best place to put anything you wanna put commercial like that's gonna have a lot of volume is on each end of the city, not in the middle of it.
I think that we, I mean.
My
until-
opinion, that's my opinion.
Until we actually have a plan for this, I mean, it makes me really nervous to be even rezoning anything right now.
I'm not, I agree with that. We don't, we're gonna rezone not based off of, we don't have the knowledge to rezone actually. Cause we don't really know where everything is. So before we go to rezoning anything, we need to make sure that we're not doing more damage than we are good.
Eric?
I think the question I want to tackle right here with this is, do we want to leave conditional use CBD for CBD, or do we want to have more conversations as a bigger picture, or do we want to eliminate CBD
I don't disagree with what.
or conditional use in CBD?
I don't disagree with what is here.
Okay.
But before we make a decision like that, I wanna use Eric's expertise, cause he's only done this, what, 45 years? I would like to see something that we can all look at as a council somehow, if we can project it onto a wall, so we can look and see what we have in our 2.2 square miles of city of Blue Ridge, and what would be the best. We can do that, right?
You're making sure the residential area is protected.
Correct.
Yeah.
Before we make any decision, I don't disagree with what's here.
Just keep in mind one thing, even if you took it out of here and you left it in the C2, it's still a conditional use. It's still under the control of the council. It still has to meet the conditions in your zoning code and the requirements that we go through when we get an application. So it's not a slam dunk, it's not necessary,
understand.
it's gonna
This might be
happen.
a stupid question though, like, but is there a way for us, like,
Hey, Jacqueline, could you speak up or
sorry.
microphone?
You having any problem when you hear me, or?
I think you're good.
like Christy and I's biggest concern is like for it to be butted up, like the C2 being butted up against R1. I mean, is there a way for us to have something in our code to prevent from something like that happening near a residential area like that?
Well,
Or-
we'd be the ones that,
Well,
I mean,
so if you look at the zoning map and that's a concern, then you would have to start changing the zoning and going back. And then Chuck can explain to you, some of these folks would have, there's existing properties, there's homes on there, and there's some that are vacant, some of them may have some vested rights, so it's a whole process that you'd have to look at. That's current, because you got a zoning map to start off with, and this is what we have to work from.
which is what
We just can't go
see.
willy-nilly change, say, oh, you're now R2, I know you're C2, but we're gonna make you R2 tomorrow. We can't do that.
All right, and again, I don't want to be too technical. You can do that, but that doesn't eliminate the use on the property, right? I mean, you could go in and adopt an entire new zoning map tomorrow if you wanted to, but the existing uses that are there would still be lawful non-conforming
But it would
uses.
change all future uses.
It would change future uses, that's
Change
correct.
future uses. So if somebody owned a property that's C2,
Yeah,
and
let me-
and we said, oh, now you're R2 or R3, they're like, wait a minute, I was gonna put a gas station on my C2, and you've materially damaged my property value.
So it does, I mean, you're not guaranteed as a property owner that you're gonna have the highest and best use of your property forevermore. So what, in a zoning situation, if someone were to challenge the zoning of their property, what you're looking at is whether the existing zoning permits, and I'm just gonna summarize, but a reasonable return on investment. You're not guaranteed the highest and best, but just a reasonable return, and that's under the law, that's a fairly low threshold.
So we have some flexibility to go and reassess the whole zoning map,
it would be a fairly significant undertaking, but yeah, you definitely have some flexibility to do it. Just the only caveat being, again, if someone has done something, let's say it's a vacant piece of property, but they've done something to vest their rights. So we change the zoning map or the zoning categories or whatever, but before we do, they came to City Hall and made application for a permit, for example. They would still be able to have their property treated under the ordinance as it existed at the time that they applied for the permit.
And I think we're having two different conversations at the same time with the zoning, you know, related to the conditional use. So I think we can either push this and talk about it as a bigger picture with the zoning, or, just specifically conditional use for hotels within C2 or CBD.
I'd like to hear.
Just the
Greg's
conditional.
opinion
Okay.
While and help us understand what we're doing as a whole on a grand scale rather than one or two places or one zone, because he's got the experience.
Well, Chuck's right, it's a major undertaking. If you want to start from scratch, take that zoning map and say, okay, what can we do to start unwinding some of these things they've done in the past? It's a major undertaking. But if that's something you want to do, you could do. But it's going to affect, people's rights, and although.
I'm not necessarily talking about changing the entire map. What I'm talking about is maybe putting buffer zones between some of these and the residential areas, or making sure that if we take something out of this zone, it's going to kind of push people to build it in this zone. And then we're going to be on, you understand what I'm saying? If I've got CBD and you change me to C2, and then you've changed my outlook on everything, then I may go to something different that maybe ain't going to be good for the community, when I could put something in that is good for the community. And if we're talking about, affordable housing, and that's really a conversation we're having, and we think we can fix this, we have to make places for affordable housing. I mean, we may have to change the zoning to do that, to keep it away from our residential areas or, our CBD or something else. And we have a lot of different opinions here.
Right.
So I think we need to sit down with folks that aren't educated on this, including myself, especially myself.
Just a suggestion, and I'm speaking on Eric's behalf and staff, it's easier for us, if the council gives us direction, this is the policy we want. And if the policy is we don't want hotels in CBD or C2, if that's the policy, that's easy enough to implement.
I understand, but what we need to know is where is CBD and where is C2, and how does that affect the residential areas? Because again, I see C2 right there in the middle of a bunch of blue.
And I hear what you're saying, but what is the concern? You want a buffer, you want additional buffer between C2 and say R1, or you want to eliminate certain uses in C2 or on C2 properties that are but R1. And again, it's not that hard for us to I'm speaking on behalf of staff, it's not that hard for us to implement what you guys want to do, but it's easier for us to start with a direction that says, okay, this is what we're trying to accomplish. We want more buffer between commercial and residential, or we want to restrict certain uses on commercial that abut residential, or we want to eliminate hotels and CBD. If we get that direction from the council, then we can put pen to paper on it and make it happen.
Are we in agreement that we want to?
Jack, let me just say one thing before you say that. So again, I go back to the conditional use, because one of the things that we look at as a conditional use is the surrounding property, and how this new use that they're trying to rezone to, how it impacts that. So we're looking at those things. So when you look at the map and it's close to residential, that's going to be in your staff report. It may be for a denial, because we think it's too close to a residential area,
I think that was one of the things for that first.
for one of the hotels.
Right.
So.
So you think we're good where we are?
No, I'm not saying that. What I'm saying is, I think that's why the past councils have used the conditional use, which gives you discretion to look at those things. 'Cause you got a small city, it's not that large, so that's, you gotta let it areas that are zoned, but it's
Well, I think
small.
we want to protect the residential areas. I think we're in unison when we want to protect the residential areas. Am I correct, that the four council folks that are here, that's what we want. So your guidance is, I guess, what you're doing right now. We want to protect our residential areas.
But if it's a permitted use in the zoning category, it's allowed without going through a conditional use. So keep that in mind. This is for rezoning, that would be a conditional use. We have that process to look at how it impacts a residential area or the neighbors,
And then we can decide whether we
want
want.
to approve it or not.
Okay.
So what's the process? Let's say we all agreed on this today, which we didn't, but let's say we all agreed on it. This has got to get read,
So-
say, next week, and then
No,
again the
we-
following month?
We would take this document, put it in ordinance form, which we've got a draft here. That would then go to the planning commission first.
Okay,
Goes to
so,
the planning commission, they hold a public hearing.
so we're lots of steps before
Yeah.
any of this can get adopted. So we got some discussion time on this. So I'd like to see the examples on the R3.
Yeah.
And my main concern is if I want to build a 20-unit apartment building on an acre, I can't do it, the way I'm reading this is I can't do that, because I'm limited to 10 units
Correct.
on an acre.
Well, let's,
Just to put in perspective, the Hampton is on an acre and a tenth, or something like that, right? They got 118 rooms in there. So I know that's 60 feet tall, but if you cut it in half, you're still 60 rooms, and you cut that in half again. I mean, it's not a high density if I want to put 10 apartments on an acre. It's almost no apartments at all. So I want to try to deal with that, and then we can look at the CBD and see, okay, how does it, but I think if we're going to do the CBD, we have to deal with C2 also.
Exactly.
well, let's, for that one, Bubba, let's take that and we will, next time we discuss it, we'll have a visual on the table with the the zoning map.
That's for me, Andy,
Yeah,
because I need to see what we're talking about.
we'll have the visual and you can see where the C2 or CBD butts residential. But-
With his judgment.
We would take
I want to see what.
single-family homes out of
Okay.
R3.
Well, let's keep moving through here.
Can I make a comment?
Not right now.
I thought we could comment on agenda items.
During the public comment section of the meeting.
We did that at the end.
Okay, with the 15 feet, you want to go back to?
It's not right now.
But when is
Thank
it?
There's an agenda located on the podium if you'd like to take a look.
I just want to make a comment about this resolution.
No, sir.
Why won't you let the citizens speak?
This is a workshop meeting between the
I know, and I
council.
was invited by Bubba to come down here.
I'm sorry.
Bubba
Let's-
said, why don't you come down here to the workshop? and-
Sir, I'm going to ask you right now to stop speaking.
Just this one.
Stop
We're
what?
going to carry on, please,
Stop what?
interacting. We're going to continue with the meeting. Thank you.
One more thing Christie wanted to talk about, Mayor, if you don't mind. She wanted to talk about the heights on the signs for 10 feet.
Okay, yeah, absolutely. Let's move forward. Thank you.
So, go ahead.
I just think having, like, I've looked at different codes and Eric's pulled codes from different places. I think having less invasive signs everywhere and kind of keeping it like Hilton Head, Rosemary Beach, very like Aspen, Colorado, they don't have like huge signs, that really change the like look and feel, where we all want to keep Blue Ridge quaint and have that hometown feel. And I feel like with the more stuff that's coming in here, especially the commercialized stuff in the 4-lane.
Christy, would you speak into the microphone a little bit?
Cutting of the trees.
Pull it to you, Christie. Sit on your laptop there. You get it to it.
Doesn't go any further.
It doesn't go further.
Okay.
Yeah, I just think that will help preserve the feel of Blue Ridge too, is not having huge signs everywhere on our 4-lane as more development may come in. So I'm just suggesting, from looking at other codes, 10 feet for most monument signs seems reasonable.
Okay.
I thought that's what we talked about the last meeting, though, was like the 8 to 10 feet.
Yeah.
Okay.
My issue with the 10 feet is we just approved a 16-foot sign for Publix.
It's a different kind of sign, ain't it?
Yeah.
No, it's a monument sign. It's It's a monument.
raised monument.
It's a monument.
It's a raised monument.
Raised monuments.
Yeah.
We
This
just
is,
approved
what
it
she's
for
talking about
public.
is a monument sign. This
No.
sits on the ground.
This is all sign.
This is the
All
code, yeah, this is a proposed code change. It would eliminate all pole signs, and you would have to have a raised monument sign similar to what Publix submitted to the council, and you gave them a variance for.
And we could do a variance moving forward if we had a place where you couldn't see that sign and we needed to raise it a
Yeah.
little bit, we could still do a
I
variance.
feel like if somebody came to us and was
They
like,
could,
Yeah,
And also,
worst case
the
scenario.
Publix development is the largest development that we have. I mean, I guess it made sense for them to
Yeah, 'cause
have
there's a lot
a
of
16,
vendors
but
going in there.
yeah, there's a lot of different businesses going in it. But I think going forward though, I personally know, and I know I've heard back from the community, they don't want to continue to see it up and down our 4 lane.
Yeah.
Pole signs?
No
Well,
big-
pole signs and those
big-
tall, like the tall signs,
big
I mean,
signs. I feel like it
we're
takes
trying to
away from
preserve
the
our
charm.
character and,
Eric?
this is a policy
Well, I
decision.
understand, but you've got an opinion, you're the guy that does our zoning, so speak it.
I don't have opinion, all I can tell you is what the history is. We originally proposed 30 feet, and that was based on the fact that the old code said they can go up to the height of what the zoning category was. So for, in this case, it would be 35 feet. That's what the old code would allow, a pole sign up to 35 feet.
So
On,
Hampton Inn could've went 50?
no, this is only on 515 and
Okay.
5.
yeah.
Okay.
So in discussing this with Christie and Jacqueline, they wanted to eliminate all pole signs, and I get that, and just go back to a raised monument sign.
And make it more like
So-
Murphy and Blair's.
Murphy, the maximum
Right.
height's 10 feet.
Yeah.
I went
Yes.
through Murphy yesterday, they got two nice signs there, and they don't take up the whole place. And again, being in insurance work, I can tell you that anything that's above about 10 feet, any wind or anything that comes through is gonna bend that sign or damage it. You have strong, winds, you're gonna damage that sign, where one on the ground doesn't seem to get damaged as bad.
So at our last meeting, we discussed 10. When I met with Bubba to go over some other zoning changes, he had said, I think that's a little tight. I think we should go back to 15.
Speak, Bub.
Yeah, I did. I said we just approved Publix at 16. So, I mean, if we're gonna give, we don't want the city staff to be bringing us a variance every time somebody wants to break 10, then we're gonna give it to them at, let's make it 15. So, I'm not gonna,
Jack,
I mean, 10's fine with me, and if,
10 fine with you?
I'll probably die on hill with 10.
Yeah,
10 good with you, Jacqueline?
sounds good with
it's
me.
just, the other issue is we don't control Tractor Supply, Whistle Express Car Wash, UNG, KOA. We have no control over that. So when you start doing something just on the other side of that imaginary line again, it's not fair.
But in the utility plan, is it?
Well, that's, yeah, then we could have some say
say
on it.
Yeah.
So 10's good with me too, if that's what you
Okay,
guys
so
want.
moving back to
Okay.
okay.
I just want to recap so we know where you are with the
Yeah.
zoning code.
Yeah, absolutely.
We're just jumping around
So
there.
it looks like we've got consensus on the appearance standards that are in your document
Yep,
after we made those changes.
yep.
On R3, we're going to go back and give you some examples on what that looks like with the
Correct.
change in number of units based on the current code. On the conditional uses, we're going to have further discussion on whether you want CBD to have as a conditional use hotel motels and look at some of the C2. And then on the signs, I think we've got consensus.
Hold on just 1 minute here.
Yeah,
And the conditional uses of CBD, I see go-karts and motorbike tracks would be eliminated. I thought we eliminated that when we worked on it last time.
no, that's currently in the code. And that was a
Okay, so
suggestion by
let's
Bubba.
discuss it.
Or, I don't have anything to discuss. I think I agree with that.
Do you agree with it, Christie?
Yeah, I'm fine with that.
Yeah.
Then that
Okay.
moves forward.
And then the signage, just as you said, that goes back to 10 feet, and we've got consensus on that.
Yeah.
Okay.
Okay. Thank you, Eric, for that recap. Anything else before we move on? All right. The next item on the agenda is the downtown restroom plans. This relates to the capital projects that we allotted for in the budget. We have a plan that was developed under the last administration. I'd like to use that plan as a starting point as we determine the council's direction moving forward. I want to note that these plans were pretty expensive to have drawn up, and at the time the agenda was posted, we did not have construction cost estimates associated with these plans. But I've asked a company, Southeastern Restoration, to give us some ballpark numbers so that we can have something to look at while we're discussing these plans. And those are presented on the table in your packet as Exhibit A. Those came in after we had already developed the plan. So at this time, I want to open the floor for discussion. There are two plans. There's a two-story plan with a walkway, and then there's a single story.
Okay.
Well, he gave you
It is a,
he gave you a quote for, not a quote, but
That's all right.
item D, sorry.
I apologize.
Yeah. Also, if you continue to look in your packet, we have a couple of renderings there.
Oh, yeah, I see.
So I'll start. I think the restroom with the sky bridge and the meeting room and 2 stories is just over the top, and it's not something we need. So I would not be in favor of a 2-story restroom that you have to do an overhead walkway from East First to get to the 2nd floor. I mean, that just seems pretty extensive. I also went down and measured. The existing restroom is 28 by 26. And this building is 51 feet by 64 feet. So it is twice as deep and twice as wide as the existing building. It's going to infringe on, I don't know how you can even possibly fit it there where the existing restroom is. I don't know where to go.
Are you talking about the double or the single story?
The single-story floor plan is 64 by 51.
Okay.
All they did in the double was take the single and put a floor over top of it. I think it's the same floor plan.
It looked like it was the same.
I don't think they changed the floor plan, they just added a 2nd floor with some other stuff in it.
You should make 2-story people.
Let me just give you some,
We can't zoom in.
let me just give you some history on this. So the original intent, we went out to bid, this is back in 22, 23, on the 2-story. There was consideration that the city possibly receive some federal funding, if you recall.
That's Boyot's design, right?
No,
You're talking
no.
about? Okay.
So, and that's why, in order to get the federal funding, you had to have so many components in there. That's why they had a substation for the police, if you recall.
That's correct.
Right.
Yeah, I
So it
recall
was
that.
all looking at trying to get federal funding. So when that fell through, and we saw what the cost would be, for this 2-story restroom, it went down to a 1-story restroom. And that's probably the plan that you're familiar with, that Boyette was, was preparing. So,
I mean, the one we have is Philip Walker.
he-
Boyot done one on here too, I think.
he was brought in to assist him in putting together the bid and the construction plans. So the city received a bid, after they moved on from the 2-story, this is just back from my memory, they received a bid for the 1-story. It was a little over $1 million, and then we negotiated with that vendor and got it down to under about $900,000.
Yeah, I remember.
Okay. And then that's about the time that I left the city.
That's the 2-story. We got it done.
No, it's 1-story, yeah, that was $900,000.
2-story was 1 point.
Well, it would start out, before negotiations, it was about 1.4 million
For the 2-story.
for 1-story. 1-story.
Okay.
They submitted a bid about, I think, let me back up. I think the bid was like 1.1 million. We were able to renegotiate that and get it down. This is for the 1-story, one.
Story, right.
I think we can see the price has gone up significantly in the past few years.
I mean, we only just budgeted $1 million, right?
So let me
Yes.
ask the question, what about the federal funding that you talked about? Did you ever get a figure on what they were willing to invest?
Yeah, that was part of, that would get us to like $1.5 million. Back then, it probably would have covered the 2-story building.
But we had to put the meeting rooms and.
What was that?
Substation.
But the funding never came through. So that's way
Can
back,
we reapply for that?
I don't know.
So both of these in front of us are one, we have two options here. One is for the one story and one is for a two story?
Mhm.
And the two story is 2.8 million, right?
Yes,
2.6 to 3.2.
yeah, there's a couple of numbers in there.
Yeah.
Well, it is the site plan though, and if you look at the numbers on this, graph here for the plans, A01 says architectural site plan, those numbers are small, our red numbers, but if you read, the plan number is A01. Should be 2 pages before the render.
This is the one I pointed out where they had, what was it, 113,000 for HVAC? Am I correct, Eric?
I don't know, that was gone.
So who bid this one that time? Do you remember who bid it? You weren't here.
I don't recall.
And you have who bidding it now?
This is not a bid, this is just, I reached out to a company, to see if they would just look at the plans and give us an updated ballpark, some numbers, so.
Just an idea to start.
Point, so. Yes, sir,
Does it need to be
yeah.
It doesn't need to be this
this elaborate?
fancy. So,
Well,
Well, if we can spend 1.5 million to build a single story and we can get the government to come in and the federal government.
I think my ultimate goal here with having these two options presented was, you know, and this is just my personal opinion, I would love to get this done. I think it's taken a long time, and so my thought is the fastest way I can see accomplishing this progress is maybe looking at that single story, picking out some things that we like, if we need to downsize a little bit, if we need to maybe look at changing some of the finishes. But I love the fact that we're able to have this conversation now. But I think if we look at doing a redesign, I know Bubba's talked about doing it up against the street there with a two-story there. We can go those options, but I think personally, I'd love to, and we can talk about that too with the plans and what that might look like. But I think personally, I would love to look at what we have and build from this to be able to take it to bid. Yeah, I agree it's a good size. I know that there are times that people have sent me pictures where there's a line of folks though all the way back up to the ramp waiting to get into the restroom, so. Take a little more time.
Him and I
That's all.
walked it.
But we budgeted $1 million, we didn't budget $1.6 million.
No. Yeah.
So if the only estimate we have is $1.6 million, then something's gotta give.
Well, you're spreading all this out. I think if you build on top of the other one, you're gonna get away a little cheaper, because it's like I said, 3 times here, it's cheaper to build
You're
up than
stacking
this out.
plumbing too, so, okay.
Right.
And you're gonna go from 3 women's toilets to 14.
Yay.
I mean,
There's only 6 men's toilets here. You're gonna put 14 men's toilets on
they
there?
not have
there's 6
urinals?
men's toilets and 8 urinals.
Oh, so you guys have
There's
more?
14 men's places to deposit.
Why you gotta speak about stuff? Right.
Okay.
Does anyone have any thoughts on the streets listed or?
I'm glad to see Church Street on there because, you know, back in this past election, going door to door, a lot of people had basically had said, you know, hey, we were promised that our street was going to get paved. We were supposed to get this sidewalk to Mineral Springs. So just seeing that on there, that's,
Yeah.
I agree with that one.
yeah, I think people really want to have that sidewalk
It'd
too.
be nice if they could do a sidewalk down through there while they're paving, but, I mean, that's not a cheap project.
That would-
Sidewalk down through
Yeah.
there is not $50.
I
mean,
know
Well,
it
it's
would
on
not
the
be in
list.
this year's budget,
Yeah,
for sure.
it's on the list, and I agree with Andy of us not overspending and kind of keeping below that so that we have something in a
So you wanna
reserve.
say you wanna put 700,000 to paving and 200 to sidewalks, or you want us
Or
to give you
maybe-
that kind of direction, and then, I mean, for me, I'm fine if you go assess what needs to be, get the most attention, and you decide where to spend the money,
Okay,
for me.
yeah. How do you guys feel?
Good.
Okay.
Can we look at grants for sidewalks as far as, especially, well, even like to Mineral Springs, because that is a natural, that it used to be a walking path from the train. People would get off the train and walk down there to go sit in the mineral baths. I feel like that there should be some kind of grant.
Yeah, I think we can definitely look for those. I know that now, just recently, we've been able to apply, we're now able to apply for those kinds of things. There was an opportunity to do a joint safety thing. It was a grant opportunity, but we didn't, I don't think that we necessarily qualified for it, but we're on the lookout for stuff like that through GMA and the finance department, you know, receiving emails. So we're staying on the lookout for some of that, but I think that's something we definitely make a priority. But if you guys are good with that direction, then I'll just kind of take and set a priority list and,
Maybe just send us an email that says, this is the ones I've decided, and this is what
Yeah.
the bill's gonna be.
keep you
And if
updated.
we got an issue with it, we can say, hey, no, don't do that, we'll do this one, or let's talk about that.
Okay. That sounds good. Thank you, guys. Have an estimated price in there for some of that. We've pieced a few things together as long as we can, but at some point, we're gonna have to make some of those electrical improvements. I know we've made some in the past, so I think that, you know, we kind of broke it down into two different phases, and I know that the major electrical upgrades at that estimate of 22,000, that really isn't budgeted for this year, but, you know, if we're looking at slowly making improvements, that's really just the kind of goal here, but I thought it was really great for these guys to step up and through their encouragement and donations, and we gotten some progress out there. You guys have any?
And that's a line item we can use hotel motel tax for,
Yes.
right? We can definitely allocate it to that. It's a tourist venue when you're doing concerts and stuff, so we can use hotel motel tax to go on that.
Yes.
I would still like to see some food trucks out there too.
Yeah.
We worked on getting some food trucks. We wired it for food trucks when we updated it.
Yeah.
I'd like to see, and I even had Chuck build us a, you know, everything we needed as far as the paperwork for that.
Yeah, I think having the stage honestly will make it more user-friendly. And I think by having some equipment there will make it more user-friendly so that it'll be easier for people to come in and facilitate it a bit.
Only one more thing I don't like, we put the lights in and then we put the cones over the lights.
Okay.
I think the cones need to be removed.
think this has got us heading in the right direction, and well, I listen usually before dark, but next time I'll go. I'll go look at the farmers market lights so we can look
And
at
one
that
thing
too.
I'd like us to think about in the 27 budget, I've talked to a couple of people about it. I would like to see us have an event coordinator position. I don't think it's a full-time.
Wraps up our discussion items. At this time, I'll open the floor to public comment. Please keep your comments related to today's topic on today's agenda. And when you come up, please be sure to state your name and address for the record.
Hold on just a second.
Okay, yeah. Yeah, yeah. We have the list. Anybody else?